Good morning, good afternoon, or good evening, depending on where you are. My name is Tobias Adrian. I'm the Financial Counselor and Director of the Monetary and Capital Markets Department here at the International Monetary Fund. We are living in transformative times. We are poised to see significant changes in cross-border payments thanks to new technology and the determination of policymakers. To discuss these changes, we are happy to bring you a half-day conference on the theme Cross-Border Payments, a New Beginning. This conference comprises 4 sessions that will be streamed on the conference website. We are starting this morning with the first session that offers a vision and high-level principles. This is followed by a second panel with the private sector's perspective. Then we move on to the third part, which is on policy responses. And finally, in the fourth session, we're going to talk about a concrete roadmap to enhance cross-border payments. In this first session, high-level policymakers will discuss the advent of new digital currencies and the future of cross-border payments. It is my great pleasure to give the floor to the IMF's Managing Director, Kristalina Georgieva, who will introduce and moderate the session.
Thank you very much, Tobias. Hello from Washington to all, and a very warm welcome to what I'm sure is going to be an exciting discussion today. We have a fantastic panel and a topic that is gathering more attention, the future of cross-border payments. With digitalization of all aspects of our lives, here we are virtually connected, accelerated today by COVID-19, once a boring subject, many called cross-border payments plumbing. Now it takes center stage in policy making. We have a chance to improve cross-border payments with huge benefits, especially for many of the world's poorest people. And there is a pressing need to do so. At a time when technology is accelerating and changing our lives, it is allowing us to hold, work, and interact in a way that was not possible years ago. Cross-border payments still remain slow, opaque, costly, and inaccessible to part of the 1.7 billion people worldwide who are unbanked. Correspondent banks, those providing access to cross-border payments, are 22% fewer since 2011. And meanwhile, remittances still cost 7% on average, more than twice the target set by the UN Sustainable Development Goals. Now, fixing these shortcomings will require a concerted and coordinated global effort involving a variety of public and private actors. And it is urgent given the need to spur economic recoveries and counter fragmentation, particularly post-COVID-19. We must improve existing systems, and we must explore new ones, potentially taking advantage of central bank digital currencies. Coming up with new solutions could bring significant efficiency gains, but it could also affect monetary and financial stability. Widespread use of new forms of digital money could make it harder for country authorities to run independent monetary policy and control domestic financial conditions. And as we integrate new technologies, we reap off the benefits of doing so, we also must contain risks. And that can only be done through international cooperation to help us all understand the macro-financial effects of using digital money across borders, make sure that all systems, old systems, new systems, operate with each other, foster common settlement infrastructure, and make solutions that benefit all countries and all people. At the IMF, we are committed to play our part to foster cooperation and bring together the future of cross-border payment systems. And this is why we are here today with a fantastic panel, some of the leading policymakers of our time. And it is my great privilege now to introduce our distinguished speakers. Mr. Ahmed Al-Khalifa is governor of the Saudi Arabian Monetary Authority, former executive director at the IMF. His country's presidency of the G20 led the work on the topic of today's discussion, culminating in a groundbreaking and ambitious roadmap to improve cross-border payments. We have with us Mr. Agustin Carstens, Director General of the Bank for International Settlements, former Minister of Finance of Mexico, former Governor of Bank of Mexico, former Deputy Managing Director of the IMF. BIS will play a major role in carrying forward the G20 agenda to improve cross-border payments. I very much look forward to collaboration with BIS in this area. And we have with us Mr. Jerome Powell. Jay Powell needs no introduction. As the chair of the Federal Reserve, he provided steadfast leadership in this time of crisis. The decisive actions the Fed put in place helped tremendously for us to have a floor under the world economy. In this conversation on cross-border payments, Jay represents the world's preeminent reserve currency. Very fortunate to have him with us. Last but not least, Ms. Noor Shamsia, Governor of Bank Negara Malaysia, former Assistant Director of the IMF. She helped us make great strides in areas such as Islamic financial regulation, macroprudential policy, and now brings perspective from the helm of Bank Negara Malaysia, a region of very dynamic cross-border payments and innovation. So let's start. The conversation today is of significance to the whole world. And of course, the US plays an incredibly important role in anything that is done in the field of innovation. Some 50 central banks are at different stages of exploring central bank digital currencies. And I want to ask Jay, what is your view on the role central bank digital currencies accessible to households and firms can play domestically, but also what role they could play internationally for cross-border payments? We know that we have had an injection of momentum in this debate. To what extent do you think that the announcement of the Libra in June 2019 has pushed us to move faster in this area? Jay.
Thank you. So good morning from Washington to my international colleagues, and thank you very much, Kristalina, for bringing us together today. And I'd like to start by saying that we are committed to carefully and thoughtfully evaluating the potential costs and benefits of a central bank digital currency for the U.S. economy and payment system, as well as for its international implications. We've been actively participating with other central banks and the BIS in that work, and we feel that collaboration has been very productive. We have not made a decision to issue a CBDC, and we think that there's a great deal of work yet to be done, as well as extensive public consultation to be had with all stakeholders before making such a decision. The dollar is the world's principal reserve currency, as you pointed out, and I assure you that we will be approaching this question with great care. That said, something like 80% of central banks around the world are exploring the idea of issuing currency in digital form. The opportunities and risks presented by a CBDC will differ by country and by jurisdiction, and the decision whether to issue a CBDC will be made by each individual country. So there are several reasons why a central bank might want to do so. For example, there are a number of ways that a CBDC might improve the payment system, and it is mainly this area that motivates our interest. These include basic issues such as faster and cheaper transactions, and more complex issues, from addressing a decline in the use of physical currency to modernizing payments infrastructure to reaching consumers that have traditionally been underserved by financial institutions. Other potential motivations are more macroeconomic in nature. Each jurisdiction will need to think carefully what its principal motivations may be, and for the Federal Reserve, as I mentioned, our main focus is on whether and how a CBDC could improve an already safe, effective, dynamic, and efficient domestic payment system. Unlike some jurisdictions, here in the United States, we continue to see strong demand for cash. Moreover, we have robust and mature financial and banking sectors, and we have a highly banked population, so that many, although not all, already have access to the electronic payments system. Our payment system is evolving quickly as technology advances, for example, with the introduction of instant or fast payments, both private and public, including the FedNow service. We think it's important that any potential CBDC would serve as a complement to, and not a replacement for, cash and current private sector digital forms of the dollar, such as commercial bank money. You asked about Libra, and I agree that it highlighted the need to improve cross-border payments and generally succeeded in focusing attention on payments-related issues, including consumer protection, cybersecurity, and privacy. So it's probably too early to say how much Libra will ultimately shape the payment system. I do think it has caused regulators to think carefully about the appropriate risk management and compliance expectations for emerging innovations. And I would point to the FSB's consultation on global stablecoins as a case in point. I'll stop there. Thanks.
Thank you very much, Jay. Very thoughtful, and I'm sure this is a good entry point in turning to Shamsia. Many emerging markets and developing countries are actually worried that foreign central bank digital currencies or global stablecoins denominated in a reserve currency could substitute for their own currencies. There is work going on in this regard, and I would be interested, Shamsia, do you see this as a risk you are concerned about? Do you think that issuing your own CBDC can counter pressures on currency substitution? I want to press on our audience here that Bank Negara has recently announced plans to explore a CBDC. How do you see the risks associated with reserve currencies stepping forward?
Thank you, Kristalina. Let me also echo our appreciation for this panel and for discussing this very topical issue. Well, the widespread usage of global stablecoins or CBDC denominated in foreign reserve currency for domestic transaction could pose a material risk to the stability of a country's domestic monetary system by undermining the effectiveness of monetary policy and the ability to support financial stability. It is worth noting that the impact of such currency substitution may be more pronounced in emerging and low-income economies whose domestic currency is unlikely to form part of the reserves backing a global stablecoin or to be widely used as a foreign currency CBDCs. So the risk could be further exacerbated for economies with less credible monetary policy regimes, for track record of financial price stability and underdeveloped payment systems. So such gaps could create a stronger incentive among the population of these economies to embrace global stablecoins or foreign currency CBDCs that would be perceived as to be more stable. So countries with less developed domestic funding and capital markets and higher degree of foreign currency liability could also be susceptible to currency substitution risk. So this may create a stronger motivation among the economic agents to acquire, to use or retain the global single coin or foreign currency CBDC to facilitate their economic transactions. But before diving into the feasibility of CBDC issuance to combat currency substitution risk, it may be necessary for us to take a step back to first understand what are the key underlying reasons that heighten a country's currency substitution risk. So, as explained by Jay, there are many reasons for currency substitution, and that could be due to a variety of reasons, ranging from the lack of confidence in the domestic currency, to an underdeveloped national payment system, or even less developed domestic funding and capital markets. So, depending on the underlying reasons, issuing domestic CBDC may not be effective to counter the currency substitution risk. So, for instance, if the underlying reason is a lack of confidence in the domestic currency, then issuing domestic CBDC by itself will not be sufficient. Likewise, if the underlying reason is due to the underdeveloped national payment system, issuing domestic CBDC may not be the only solution. One could have efforts to modernize the national payment system, such as implementing a 24/7 real-time payment system, and that could be as effective and to counter the risk of currency substitution without having to incur the relatively high level risk often associated with the issuance of domestic CBDC. So, given the cross-border nature of global stablecoin and foreign currency CBDC, efforts by any single country alone may not be sufficient to counter the risk of currency substitution. International coordination and collaboration to define the appropriate framework of standards for global stablecoins and foreign currency CBDC would be key to promote responsible innovation while mitigating the associated risks to monetary and financial stability. So, any decision to issue a domestic CBDC will need to be carefully considered, taking into account the underlying motivation and circumstances of a particular country, and supported by appropriate safeguards to mitigate the associated risks. I will stop here, Mr. Lena.
Very much, Shamsia. I want to turn to Ahmed. First to say thank you for the leadership you have provided in a G20 context on this topic. But my question to you is about the use of CBDC to facilitate cross-border payments. You have piloted with the United Arab Emirates Central Bank issuing exclusively to financial institutions. Is that a promising avenue to explore? What is your experience? What is your advice to us for the future?
Well, thank you, Kristalina, and thank you for having me participating with such distinguished speakers on an important and timely issue. We have a project, we called it ABIR, with the United Arab Emirates Central Bank. The aim was to explore the area of the design of the wholesale CBDC and its application in the issue of a single currency in particular, as well as cross-border settlement. In this experiment, 6 commercial banks have participated, 3 from each jurisdiction. The initiative, it was, as I said, mainly to investigate and help us to capture insights into the potential use and any challenges that might be associated with the CBDC. Our experiment, in fact, revealed that the technology was viable for cross-border wholesale payments, where we sought to explore how we could potentially leverage the unique characteristics of the distributed ledger technology. One of the unique characteristics about this project was using the fiat money. This was achieved by commercial banks depositing or pledging actual funds with the central bank and creating equivalent amounts of the digital currency that would then be used to simulate defined transaction types between the two counterparties. The use of the real fiat money, in fact, motivated both commercial and central banks to think about how the digital currency would be managed in their books and which core banking systems would be impacted if such a system were to be implemented. The aim, of course, of the project was to test the feasibility of achieving the business objectives of the DLT. One of the main insights that came out of the project of Aber is related to building capabilities and knowledge into our resource pool. In addition, the project, of course, helped us understand that there were many economic and policy considerations, particularly in our area, related either to capital movement and financial sector stability that need to be explored further. We, of course, embraced payments innovation in SAMA through such projects. The Aber project created good opportunities for commercial banks who are key stakeholders of any wholesale CBDC project to have first-hand experience of using and operating DLT-based interbank payment solution. I am in the view that wholesale CBDC is a topic worth exploring further for a number of reasons. First, it can improve the architectural resilience of the payment infrastructure through relative decentralization. Second, it can lead to improvements in security by using wholesale CBDCs on DLT platform as a backup to the RTGS. We believe digital payments, including the CBDC, in both retail and wholesale situation would be helpful in supporting a safer and hopefully more efficient payment system overseen by central banks. Thank you.
Well, thank you very much. All three interventions indicate that digital money is making a difference. And the question is, how is this impacting the international monetary system? And I cannot think of a better person to answer this question than Agustin. So do you see already CBDCs issued by major countries as a factor to alter the international monetary system? And most importantly, are you concerned that this could lead to fragmentation? Are there risks we should be mindful of, and how do we deal with them? Agustin, what is your thinking? You have a front seat in this discussion.
Well, thank you very much, Kristalina, for having me in this very prestigious panel. It's always a pleasure to participate in all these seminars that the IMF very thoughtfully puts together. Definitely, I think CBDC and payments, cross-border payments, is a very relevant topic. And to answer your question, let me start by establishing a few important facts. First of all, CBDC will always be a national decision. It's a sovereign decision. It will be the third type of liability of a central bank, and therefore it will respond primarily to domestic circumstances. The fact that, for example, China, Sweden, the US, Mexico are at different stages in not in doing it, because with the exception of China, not much has been done in other countries, but in thinking about it, the different stages of the thought process just reflects the different circumstances that each country is facing and the different needs that they have. Now, in all our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. those two issues are extremely important, and that makes a huge difference with respect to what cash is. Therefore, I think this lends itself to design carefully CBDC in such a way that they will not be a vehicle for fragmentation, for financial instability, and for spillovers. Therefore, I don't think that by themselves CBDC is a threat to the international monetary system. For example, in the issue of currency substitution, if an advanced economy issues a CBDC and somebody in a third country wants to use it, it will require the consent of the central bank of the residence of that person. Therefore, the degree of control will be far bigger. Now, this I think it's good news, because I think that it really provides the ground for us to think on how can we use CBDC to really obtain these higher objectives of facilitating payments internationally. How are we going to make them to reduce costs, to enhance inclusion? How are we going to make this route run smoothly? That is something that so far we haven't achieved. There are many efficiency gains that can be captured, and I think our concentration should be there. The threats to macro financial stability, I think, are limited. And if I understood well Shamsha, because the sound was not that good, she said that those aspects of macro financial instability are more a reflection of other issues, and I tend to agree with her. Thank you very much.
Well, thank you very much, Agustin. I am in your camp. I think there are tremendous advantages of moving in this direction from a cost efficiency and also accessibility standpoint. But it is good to have these conversations that help us to move together in the right way. I used to say the future is digital until I realized the future has arrived. And Jay, you helped me realize that very much. In the summer, you said the following, that you do not want to wake up one day and realize that the dollar is no longer a world reserve currency because we just missed a technological change. I have full confidence this is not going to happen with you at the helm. But can you unpack a little bit this thought? Do you see a first mover advantage in introducing CBDC? Do you think that technology might put us in a difficult place by changing the options in front of us? How do you think, in the fact, about this technology being already present and pressing on this issue?
Thank you. So the sense of that comment was really that I feel that we have an obligation to stay on the forefront of policy and technological innovation and developments as regards payments, cross-border payments, CBDC, all of those things, rather than that I felt anything needed to happen quickly or imminently. In fact, I actually do think this is one of those issues where it's more important for the United States to get it right than it is to be first. Given the dollar's important role globally, it's essential that we remain on the frontier of research and policy development. The dollar is the world's principal reserve currency, and there continues to be large global demand for Federal Reserve notes. There's about $2 trillion worth of Federal Reserve notes in circulation, and we estimate that somewhere close to half of that value in notes is held outside of the United States. Use of and trust in the dollar comes from the reliable rule of law, strong and transparent institutions, deep financial markets, and an open capital account. A healthy and efficient payment system demands these features, which reach far beyond the merely technological. So we do think it's more important to get it right than to be the first. And getting it right means that we not only look at the potential benefits of a CBDC, but also the potential risks and also recognize the important trade-offs that have to be thought through carefully. We have a responsibility both to the U.S. and to the world that any steps taken for a U.S. digital currency be taken safely. We're absolutely committed to the soundness of the dollar and to safe and efficient U.S. dollar payment systems. So in addition to assessing the benefits, and there may well be benefits, there are also some quite difficult policy and operational questions that need to be thoroughly evaluated. And just to mention a few, I would mention the need to protect a CBDC from cyber attacks, counterfeiting, and fraud, the question of how a CBDC would affect monetary policy and financial stability, and also how could a CBDC prevent illicit activity while also preserving user privacy and security. Assuming that those things can be resolved, yes, there are potential benefits, but that's going to take a lot of work and thought, we believe. So they're not simple questions, and the answers are going to need to be comprehensively understood. So I'll stop there. Thanks.
Yeah. Well, thank you, Jay. So very important to indeed keep this balance between aspiring to capture the benefits for people, for the economy, but also be sure that we do it right. Thank you. I am so comforted listening to you, Jay. In this area, the public sector is very important, and the institutions that hold our monetary system in shape are very important. We also see the private sector playing an increasingly significant role. We see space for public-private partnerships, and I want to turn to Shamsia. Malaysia is part of a very dynamic region. Private sector innovation plays a significant role. How do you see the role of the private sector from where you sit with regard to solutions to cross-border payments? Is there something that you have learned in Asia, in Malaysia, that is valuable for all of us?
Definitely, Ms. Lena, that the private sector has an important role to play in driving. Definitely, the private sector has an important role to play in driving innovation and adoption of efficient cross-border payment solutions. On the supply side, for example, private sector investment and dynamism will be critical to foster continuous improvement and innovation to cross-border payment solutions in a commercially sustainable manner. On the demand side, the private sector players can also support migration to more efficient payment solutions through their frequent interface with and better understanding of end users, which may contribute towards better solution design that addresses prevailing pain points. So even with CBDC, private sector players would have an important role to play, particularly in areas that traditionally fall outside the ambit of central banks. This may include conducting KYC, distributing CBDC, managing transaction records, and providing overlay and value-added solutions to serve the different needs of the customers. At the ASEAN level, we continue to strive to realize the vision set out in the ASEAN Economic Community Blueprint 2025, which said to be a highly integrated and cohesive economic region. So in realizing this vision, efficient and safe cross-border payment has been identified as a key enabler and a priority area. In view of this, ongoing efforts have been made to enhance the efficiency of cross-border payments through the interlinking of real-time retail payment system, which will serve as a more efficient alternative to conventional payment methods. And to foster an enabling environment for the establishment of regional payment linkages, the Working Committee on Payment and Settlement System has developed what we call the ASEAN Payments Policy Framework, together with implementing policy guidelines. So this framework sets up the vision for ASEAN payments integration and the roadmap for the establishment of interoperable cross-border real-time retail payment linkages with at least 5 ASEAN countries to be linked by 2024. But taking into account the diversity of the ASEAN countries and the varying state of readiness of members, the participation in this regional linkage is on a bilateral and voluntary basis at the individual state. So we have also developed guiding principles and policy considerations aimed at establishing a common regulatory approach, common standards to facilitate interoperability, and where possible, local currency settlement to enable better management of FX risk and costs. So we have made some progress on this front. The one that I can recall is, like for example, the cross-border tax card payments between Malaysia and Singapore has been linked. So that will enable the Malaysian customers with Malaysian ATM cards to be able to use that cards in Singapore. Thailand and Singapore have also linked to enable the cross-border QR payment that will allow users to make cross-border QR payments starting from the first quarter next year. And similarly, Thailand and Cambodia have also in agreement to launch the interoperable QR payment linkage between Cambodia and Thailand. So these are some of the examples that we have achieved thus far under the ASEAN Economic Blueprint, Kristalina.
Thank you, Shamsia. And I am very sorry. We do have a bit of a difficulty in the connection with you, but I hope that people were able to follow your very interesting illustration. And I'm very keen to hear also from Augustine. Augustine, you created the Innovation Hub. This is a very bold step in a direction of moving BIS in the front of these discussions. What is your experience so far? How do you see the hub fostering collaboration between central banks and also bringing this public-private collaboration to serve us on this fascinating journey? What has been the experience so far? Where you're headed next?
Thank you very much, Kristalina, for asking this question. We are the bank of the central banks, and the fact that the board decided to launch the BIS Innovation Hub is an expression of the conviction of central banks of the importance of financial innovation. Right now we have 3 innovation centers: Singapore, Hong Kong, Basel, and we are going to open 5 more with the partnership of TCB, with the Nordic central banks, with the Bank of England, Bank of Canada, and a special partnership with the Federal Reserve System. Basically, our mandate will be to scope technology and identify which technological developments will be of importance or of essence for central banks to get familiarized with. Second, to try to identify what are the public goods that could be developed and exploited to facilitate central bank activity, but also to fulfill the roles of central banks in terms of payments, financial stability, and so on and so forth. And third, to create a network of experts just to keep central banks on the lead in these aspects. Agenda of topics are, for example, CBDC, FinTech, RegTech, different parts of payment systems, issues of identity, and eventually we want to be a real catalyzer for action. and be a nucleus for cooperation and collaboration. If we want CBDC to really make a difference in the payment systems, we need a lot of cooperation in the areas that have already been pointed out. And I think that we need to bring the different parts together. The BIS is working in this direction, not only through the hub, but also through the CPMI, which is all the collaboration of different areas of central banks in payments and also in research. Now, that doesn't mean that we need to do this as a central bank only issue. There needs to be collaboration with other areas like in the FSB, and needless to say, to have very close collaboration with the IMF would be of the essence. So we're looking forward into it. We're responding to the need that central banks are facing in this area. And what I think is very significant is that the hub is an expression of a central bank's conviction that central banks need to be in the lead in these topics. Thank you very much.
Thank you. Indeed, this is a very clear indication that you have no intention to leave the innovation in this area entirely and only in the hands of private sector. Very clearly, you're taking the lead in that. And I would be interested, Jay, how you see it. Clearly, central banks may have to regulate private sector firms. There is space for partnership. There may be need to counter with independent solutions what the private sector is coming up, going back to Libra. How do you see remaining on the front of these developments? What is the Fed thinking in that regard? And how do you see your collaboration with BIS? Agustin mentioned the special partnership with the Federal Reserve System. So how do you see this new frontier and what role you play at it?
Thank you. So let me start by saying that we strongly support the work of the Innovation Hub and would stress that it's very much geared to creating public goods. We will have lots of conversations with industry and stakeholder engagement, and that'll help us in our work on digital currencies and cross-border payments. We need to work collaboratively with the private sector, and we also understand there's a need to do ways that foster development of public goods. So the private sector is likely to be able to contribute through technological innovation. The public sector brings a perspective that seeks broad public benefits. And with payment systems, there are going to be potentially large network effects that create increasing returns to scale, meaning that we may well see over time emerging a small number of dominant players and ultimately great difficulty in competing with those players. Indeed, that is what we see with a number of the tech giants today in their existing businesses away from payments. We do need to collaborate with the private sector to best achieve our goals, and we're very mindful of the challenges of doing so. And yes, we can be and we must be on the forefront of research and policy development. So the Fed has been working for a number of years to better understand the opportunities and risks presented by technological innovation. We're taking a multidisciplinary approach to these issues, bringing together economists, policy analysts, technologists, lawyers, and others to tackle the subject from multiple angles. We've been able to harness the strength of the Federal Reserve System with our 12 reserve banks and the Board of Governors to help us gain a more well-rounded view of the topic. So, for example, to further our understanding of the capabilities and limitations of different technologies and platforms, we've been engaged in a number of research projects. One set of experiments is being carried out at the Board of Governors here in Washington, D.C. Complementary efforts are also now underway, for example, through the Federal Reserve Bank of Boston, which, in collaboration with researchers at MIT, is developing a hypothetical central bank digital currency. These types of experiments advance our understanding of the risks and benefits of CBDCs, measuring trade-offs between different designs and system arrangements, and assessing security risks. On the policy side, we're also actively engaging with a wide variety of stakeholders from government, academia, and the private sector to gather differing perspectives and expertise about potential CBDC issues, the range of design options, and other considerations. We anticipate expanding this dialogue to ensure that we're developing a broad and inclusive understanding of these issues. In all of these efforts, collaboration with other central banks around the world continues to be vital. Thus, we continue to offer strong support for the research efforts of the BIS, the Innovation Hub, and in particular for the group of central banks around this BIS that we've been working with to evaluate costs and benefits of a CBDC. So we think overall these efforts position us to be able to engage proactively with a wide range of parties on rapid developments in these areas. And as you mentioned, we're doing so within the framework of serving concurrently as supervisor, payment service provider, and issuer of the currency. Central bank money and private dollar-denominated money, particularly commercial bank money, effectively fit together in the current payment system. So any CBDC will necessitate roles for the public and private sector. Thanks.
Thank you very much, Jay. This is fascinating, the speed with which central banks, the Fed, are moving in this direction of making sure that the public interest is protected and is best served with the developments we pursue. And talking about public interest, one of the aspects of our conversation today is about inclusion. What can be done so those who have limited access or at this point of time no access whatsoever to the financial system we are describing can be included? How improving cross-border payments can play a role, and to what extent we can venture in technological improvements that can accelerate this process of inclusion, more specifically digital ID. If we are imagining a world in which digital is the way in which financial transactions take place, how could poor people, especially poor people in poor countries, can be part of it? And Ahmed, I want to ask you this question. You have given a lot of thought to it, especially in this year of leading the G20. So how can we get there? Do we need to put more emphasis on the issue of reliable national ID systems? How do we make it so that we walk on two legs, on the financial side, but also on the ID side?
Well, indeed, one of the very important goals of improving cross-border payments is to enhance financial inclusion in our region in particular, for the reasons, for a number of good reasons, in fact. But a key hurdle to greater inclusion would be the lack of comprehensive and reliable, what you call it, the identity system, whose information can be trusted in other jurisdictions. I agree that offering such a system has to be a cornerstone of global efforts to improve both national and cross-border payments. The establishment of identity systems in the cross-border, which is probably remote, is clearly linked to streamlining the KYC and the customer due diligence processes. In the domestic level in Saudi Arabia, we are working on a national eKYC system which harnesses our national identity system through the KYC ecosystem. The critical factor is how national systems, i.e. national identity and KYC information, can be harnessed in the cross-border context and trusted by all parties. Working with the Financial Stability Board and the Cross-Border Payment Coordination Group of the Committee on Payments and Market Infrastructures, the CPMI, we have identified this objective as a specific building block in the roadmap to improving cross-border payments. This initiative will require extensive coordination among government agencies and financial institutions, as well as support from multilateral organizations such as the IMF. The financial costs of developing national digital ID and building shared KYC and digital ID infrastructure may also be significant, and this will prove a challenge for emerging market economies to fund, particularly in the current environment, the current economic environment. Thank you.
Yeah, thanks very much, Ahmed. A lot of work to be done. And it has to be done recognizing that we are interconnected. We do need to work together. And I want to turn to Augustine. Augustine, how do you see us building a strong foundation for the whole world moving in this direction together? In other words, interoperability, common standards, consistent legal framework. What role do you see for institutions like yours and like mine to make sure that we make progress in a way that brings the world together?
Well, thank you very much, Kristalina. I think both institutions can play a tremendously constructive role. I mean, I think if we think in the international dimension, the huge challenge is to assure that the international operability of CBDCs is there. And this is a huge task. A lot of coordination will need to take place in the areas of technology, in the legal areas. We also have to think what are the economic functions that we want CBDC to play internationally, what are the implications for exchange rate decisions, for example, or the exchange of currencies, what are the implications of that. Therefore, I think that to manage to define the minimum set of standards that are necessary to really have an efficient operability of payments on the new dimension, I think is huge, and it requires to bring all the forces together. I think something that Jay said at the outset, that the outlook of the Fed is, if I use different words, is this is a type of issue that we need to go slow because we are in a hurry. And precisely we need to go slow to avoid mistakes. And we have to realize that when we deal with payments, electronic payments, there is no room for mistake. I mean, if I want to send payments from Switzerland to Mexico, I would not tolerate a mistake, and nobody should tolerate a mistake. And all what can go wrong is there are many dimensions. So the challenge is huge, and therefore the effort behind being successful will be huge, and therefore we need to add forces with the broad membership of the fund, with the membership of the BIS, in particular the concentration of central banks. I think that we can certainly put a very solid team together to make this happen. The FSB has been, and the G20 has been, a very important catalyzer already. So there is room for everybody to collaborate in this huge endeavor. Thank you very much.
Yeah, thank you very much. It echoes very much what Jay also said about the importance to do it right rather than to do it fast. And this getting it right, go slow, we are in a hurry. is a message I think would resonate with many in the audience. But go nonetheless and get to the right destination. We recognized Saudi Arabia for placing the issue of cross-border payments at the center of its presidency when it comes down to how we can make the financial system work better, and especially for the more vulnerable people. So, Ahmed, I want to finish by turning back to you. You're going to pass the baton to the next G20 presidency. What would you ask Italy as they move into their role to do in this area? What is your legacy that they need to embrace? What next?
Well, the G20 has created a special group to look into cross-border payment reforms. This time, the Saudi G20 presidency wanted to do more. We wanted the major economies to agree upon a roadmap that focuses on the issue that is most hindering the safety and efficiency of the payment systems, namely the cross-border elements of the international transfers. This roadmap features an impressive set of building blocks with implementable steps. During our October meeting of all the G20 members successfully endorsed the G20 roadmap to enhance what we call the cross-border payments. The various building blocks lay out different tasks, in particular for a range of international institutions and bodies that will be invited to report periodically to the G20 on their progress with respect to implementing that roadmap. They include, of course, the FSP, the standard setting bodies, the Committee on Payments and Market Infrastructure, the IMF, the World Bank, and the FATF. The periodic reporting across the future of the G20 presidencies, including the next Italy, will ensure that this work continues. The G20's political endorsement will secure the momentum to drive the work forward. And let me use this occasion to thank all the national and international bodies who worked tirelessly and cooperatively in the G20 in this roadmap. And also I thank Italy for taking this further in the next year presidency. Thank you.
Well, thank you. Thank you very much, Ahmed. Are you encouraged by the discussion we just had? Do you see that there is a momentum going forward that you helped accelerate? Yes?
Absolutely.
And I see Jay and Shamsia and Agustin nodding. Fantastic conversation. I want to thank you for sparing some of your time. We are in front of an open window of opportunity with the chance to have a long-lasting positive impact by improving cross-border payments, by enhancing financial inclusion. We at the IMF will do our part. We recognize our responsibility as an institution with now 190 members during these annual meetings. We accepted Andorra, our newest member, and we will partner with BIS, with FSB, and of course with all our members so we can make progress mindful of the complexities. Just to mention one, cybersecurity that Jay flagged in his intervention. Cooperating, we will make progress, we will get there. So thank you, bravo, very interesting discussion. First of the additional work that would be done today, Stay tuned. The conference continues. There are 3 more panels on the future of cross-border payments. They would be streamed on the conference website. So join me in thanking the panelists. It is harder today to do so because we are in this big virtual room. So on behalf of all of those who have tuned in, thank you. Thank you.
Thank you.